With that, I'd like to welcome some of the investors that make it possible for these new transformative ideas to hit the marketplace. So if I can welcome up each of our investment panel speakers and take a seat of your choosing. Okay, well, we're delighted to have each of you here today, and I'll be making introductions of each of our speakers, but I thought I'd start with a bit of the trends, and some of this was already addressed by Lucas of where the industry is going, but specifically, many of the companies are seeking financing. And this can be a complicated world to navigate, and it's been a very fast-changing segment of the venture capital world, as this industry has had tremendous growth rates. So I thought I'd tell you a little bit of what we're seeing from a couple of different reports that have come out. Each year we have highlighted a couple of trends that we're seeing, and there's two reports in particular that might help to give some insights. In particular, AgFunder and PitchBook have released some data about investments in the last year since we were all gathered together. There's been a rise, according to PitchBook in 2017, a 31% growth rate in the deal count from 2015 to 2017, specifically in the AgTech sector. And you'll note a little bit of volatility in that time period of actual dollars, but more deals taking place. And so that's encouraging for those that are seeking perhaps early stage funding as well, as some of that money was coming in at the early sector of the industry. And if you look in last year, in particular in 2017, there was a pretty dramatic quarter. In second quarter, a record spike of $530 million going into AgTech companies, and I hope we'll highlight some of those types of trends and growth potential areas with our speakers and experts today, with different sort of areas, as I'd mentioned, whether that's angel and seed or later stage funding going into companies, but that angel deal flow seems to be one of the most vibrant in the recent past. The farm tech sector is maybe sometimes confused with an overall ag tech sector, and so since our conference today is an ag tech summit, I thought I would clarify, depending on who you ask, what ag tech means. In some cases, as was just described by Lucas's trends, we're talking about food products, and food products are being delivered to us in new ways, and now more functional foods that are serving new opportunities for nutrients to consumers, more traceability that thinks about where it came from and the value chain. But many of the companies that we're here today highlighting will probably be focused more on what would be considered farm tech. So on-farm solutions, whether that's precision farming or new novel farming methods. In particular, as AgFunder breaks out that data, they look at a larger value chain with about $4 billion invested, of which on-farm is about $1.1 billion. So a lot of this investment is taking place specifically at farm solutions, but it's different in perhaps its orientation to consumer products that are also food technologies or food products, of course, that are inspired hopefully by some of those on-farm solutions. So it's a subsector perhaps that's of most interest to us today. And within that, there are many categories of interest, whether that's ag biotechnology, whether those are agribusiness solutions, bioenergy, sensors, robotics, numerous opportunities for software and digital impacts within the industry. And so what are investors saying as well? As we look at who investors are interested in, I hope we'll hear from the experts of what specifically excites them. Many of these deals are being put together with syndicates, so a coalition of investors interested in like-minded technology areas, and some that were recently highlighted in a survey included precision agriculture, seed technologies and biologicals, digital agriculture, water conservation and sustainability technologies around that opportunity, new types of pesticides, and tackling bacteria, diseases in crops and livestock. The investment landscape includes some of these that are on our panel today, but it also includes many traditional investors in the Silicon Valley area that are also now increasingly interested in ag tech. So how do we bridge these communities and see the Midwest playing a key leadership role as well as the home of many of the growers, the home of vibrant and big agriculture? How can we help to impact the future of ag tech with new technologies, new enterprises, and play a leadership role from an investment standpoint? So it's my pleasure to introduce some of the people who are making that possible. And I'm going to go in just the order that the slides are, but not the way that you're seated necessarily. And then we'll get into a conversation. So I'm going to say a few words about each of you, and then I'd like you to each, as I introduce you, then have an opportunity to share a little bit more about your firm and your perspective in the industry, and we'll get into some questions after that, and certainly some audience participation. So anybody who has questions for our panelists, be thinking about those, and we'll have microphone opportunities after these questions are initially asked. So with that, Tom Parkinson works right in my building, so I see him now a lot. And it's been great to have a longtime investor from the Midwest, somebody who had worked in the Northwestern community, come to Champaign and share his wisdom and his coaching to companies. I think of Tom as the practical guy in the room who will say perhaps what's necessary to be able to take your idea out of a university lab and to be able to bring it to the marketplace, and hopefully have Illinois Ventures as one of those partners that was started out of the University of Illinois to help that transition be possible. Tom, welcome. Do you want to say a little bit about Illinois Ventures before we get started?
Sure. Do I have to hold one of these for people to hear me? I can't get it out of the holder, so I'm not going to. So I've been working with early stage entrepreneurs as an investor, as an advisor, as a teacher, inside and outside of universities for a long time now, and it's amazing how much things have changed. I will say that Illinois Ventures, we're not particularly an AgTech investor. Our mission is to invest in and support technology-based startups of any kind coming out of the university. I think the reason I'm here is that there's really been a big shift in kind of the whole technology commercialization landscape here at the university, and ag technology and technologies not just coming out of the College of Agriculture, but coming out of departments like chemistry and other places that have agricultural impact. We're seeing more and more of those, and we've made several investments in ag tech companies over the last couple of years, and I expect that that's a trend that's going to continue, and it's going to increase in the next several years. I can share some comments just about the landscape a little bit, but I think I'll save that for the conversation.
Great, thanks, Tom.
Thanks.
Next, I'll introduce Dave Russell, who joins us again this year. Lewis & Clark Ventures out of St. Louis has been a tremendous addition to our Midwest community, focused on agriculture, and he brings his background from Monsanto into that expertise. And it was noted as one of the larger ag investment funds in the country, as those reports indicated. But Dave has been a part of this community for a long time, helping to see where there can be transformational technologies, biotechnology, as well as farming solutions. Dave, welcome to the University of Illinois.
Thank you, and good morning. Lewis & Clark is a relatively new ag fund, less than 2 years. And we're part of what's a fairly small group of VCs that their first focus is really on ag. It's a half a dozen, maybe 10 at most, depending on how you want to count, whose first look is really around the ag sector, whether it be ag tech, farm tech, whatever the terminology you want to use. Our stated target is more of a Series A type of a more developed company that has a prototype and needs some additional resources to really get into a growth phase and really prove things out. But we're constantly interested in looking at the earlier stages as well. To some of the earlier comments from Laura, it seems from our point of view that there is actually a fair amount of seed money out there in the agriculture space, if you know how to find the right people to talk to. But it's harder as you go downstream in terms of that next piece of resource where you really want to start to grow, and that's the area that we're trying to fit into. We've been in our first year and a half or so, we've invested in 4 companies so far, and it's really a broad range, all the way from seeds and traits, microbials, crop chemicals. In our case, crop chemicals is actually RNAi, and farm marketing, grain marketing downstream. And so we want to be broadly looking across that. And one of the areas that we get excited about, but we aren't seeing that much of, is really around some of the downstream pieces. You heard a little bit from Lucas about post-harvest issues. The whole supply chain downstream of the farm gate is a really important area that I think there's a lot of opportunity in as well.
Thanks, Dave, and we're excited to hear more about your investments since the last time you were here, as there's been some continued investment activity that was just as its sort of infancy as Lewis and Clark was launched. Next is a long-term friend of the Research Park. Rob Schultz has been a part of this community since its growth here, first with Illinois Ventures and for now quite a long time with Sarah Ventures, investing in numerous AgTech opportunities, somebody with deep digital and software expertise, and now seeing how that can be used and leveraged within the agriculture sector. Rob, can you tell us a little bit more about Sarah Ventures, which has been growing with new funds and new investments?
Thanks, Laura, and I apologize for just getting over a cold that I'm sure probably half this room has had at some point during the season, so you have a little empathy for me. So as Laura mentioned, Sarah Ventures, we've got offices, we've been founded here in Champaign, but have expanded. We've got an office in Chicago now and in San Diego as well. And we characterize our firm more as generalists, investing in IT, various themes in IT and med devices and scientific instrumentation. But in our third fund, we specifically called out AgTech as a sector of more specific effort, theme generation, and focus as we kind of courted our LPs. And the primary reason is because we're in Champaign and where we're sitting here today. We feel as though, for once, we had maybe a comparative advantage to other venture firms in terms of having access to experts in academia. Just go look at the logos and the buildings, around the Research Park here. In fact, our office sits above the John Deere Innovation Center, and then access to customers, ranging from dairy farmers to row crop farmers. We can actually go out and touch customers to vet ideas. So, all of those reasons have caused us to focus and become actually one of the more active AgTech investing firms here in the Midwest. We've invested in a number of different themes, very thoughtfully put together, that we think have kind of closer ability to adoption. I think we're still fairly skeptical over the long run in terms of farmers adopting, so we're tending to look for ideas that are kind of supported by the greater ecosystem, that are more interesting to larger companies, more supply chain issues, et cetera. So we'll talk more about that later.
Great, thanks, Rob. And last but not least, a new speaker for us, and somebody I'm happy to bring to our community. I've had the pleasure of serving on Farm Illinois board with Matt Walker from S2G Ventures, who has the firm is located in Chicago, and they've been one of the more active AgTech investors. So Matt brings a different perspective, thinking about the whole value chain, and we're delighted to have him here at the University of Illinois. Matt, welcome.
Thank you so much. S2G stands for Seed to Growth Ventures. We are a food system focused venture fund, and our thesis is really based on a changing consumer that views food as a health and wellness tool, that cares about the quality and sourcing of the ingredients that go into the products that they eat. And they're voting with their pocketbook around several themes. I think they're at a $1.2 to $1.4 trillion system in the US, they're niche themes, but they're multi-billion-dollar niches. So you have organic as a brand is a $45+ billion brand, if you want to call it a brand. You have free from, local, and the like. You have various different groups that are more fragmented than I think what the incumbent system was set up for, which is really, affordability, efficiency, and consistency. And I think, that potential friction or that inflection that we see in the market is really where we find our opportunities to invest. We see that inflection across the supply chain. So we are in everything from upstream, what we're calling farm tech. Thank you for that definition, by the way. 'Cause we say AgTech pretty interchangeably. But we call farm tech, we're in businesses, all the way from upstream to, on the other end, we have 11 or 12 brands in the portfolio. We have fast casual, production, processing, ingredients. We're in 35 companies to date. We've been doing this for 3 years, so we've been going way too rapidly in terms of the way we've invested. But we'd like to think that the breadth of investments that we've made gives us a view into the inflection that you see across the supply chain. and hopefully, they can make us smarter investors, but also help our portfolio companies as they look to scale and expand their reach as well. We're a small team based here in Chicago. Very happy to be here.
Well, thank you. So now I'm going to get started with a bit more of a casual conversation and get your expertise. So having you all here, I think, gives us an opportunity to learn what's on your minds and what you're seeing as trends. So Matt, as you just said, I gave kind of a definition of ag tech, farm tech. That's a lot because when we hear about this investment area, it's everything from how do we get groceries to consumers through delivery companies, through farm solutions that might be targeted at livestock producers in a very different realm. And that makes it a little bit complicated to navigate. Can you talk about sort of how you see maybe these two worlds colliding or not? As Lucas described, there's a demand by consumers that is about traceability. It's about the ingredients having nutrients. It's about being able to think about labels that drive what consumers are asking for, that requires the growers to track that in their growing processes or change the way they farm and use nitrogen or water in their processes. I'll start with maybe Rob, because I know you've invested in a company in this space. What do you think about those connections between the food types of companies and the on-farm companies, and whether they are in the same sector or different?
Thanks. Yeah, it's a great question. Actually, we've invested in two companies in that category. Label Insight is a company that's got about 110 employees, both in Chicago and in St. Louis, that is helping kind of bring visibility to food labels and help educate consumers. And then right here in our home, Agrible has done an incredible amount of work in helping identify sustainable farmers and making sure that ingredient flow kind of goes into our food supply in a sustainable way with that same visibility. So I guess the short answer is both. I think what's exciting about that category is it's what's on the mind of the consumers. And kind of coming back to what is an investable model, what we also like about models like that is you don't have to rely on the farmer to pay $1 per acre to really engage in these types of activities. So it's on the mind of the large CPGs that are taking action in this category because their customers are demanding it, and they're willing to pay and invest in models that support visibility and sustainability efforts.
So maybe I'll go to Matt next. Being from Chicago, we hear a lot about the food demands and industry interests. Can you talk to what you see as opportunities, perhaps specifically even in the Chicago area, because there's a presence of both?
I think for us, really just because the consumer is our North Star, I think a lot of what we're seeing right now is that decisions that have to be made on farm are really driven by what the consumer is looking for on an ingredient label or what a CPG is looking for because they want to market an ingredient label. One of the things we saw, the Chicago company RX Bar, they took the ingredient label from the back, put it on the front, $600 million. I mean, it's not that simple, of course, but this is, and we missed out on that one. But I think that is indicative of what we're seeing in the market right now is the opportunity to really use the ingredient quality as a driver of value. And so the opportunity that we see to invest is for companies that can either solve some of the principal agency issues that you see between what is often a tenant farmer that makes decisions on an annual basis or doesn't really have an incentive to do certain things to the soil that may not benefit them and that require several years to get done, or you have a CPG who is looking for a specific spec and doesn't have price or volume discovery. If I need purple corn or high oleic soy and I need it at scale, it's hard to go out and source some of those things because when you go to a commodity exchange, you're looking at commodity prices. Commodity corn is $350, $360. Certain organic is 9 or 10. What's purple corn? And so we look at opportunities here in Chicago, being that this is a hub for trading for certain businesses that are, working to bridge that gap and provide connectivity between what's happening on the soil and what CPGs are doing in terms of making medium to long-term decisions for their ingredient labeling that they'd like to evangelize. And I think, that's it's liquidity, it's trading, it's financial services that allow certain long-term decisions to be made on the soil. And I think a lot of people are trying to find creative solutions to bridge that gap and deal with some of those principal agency issues that you see in the market.
Great. Dave, I guess, in St. Louis, there's a long tradition in excellence in plant sciences. So maybe you have a slightly different perspective to be able to bring to that, coming from sort of the big agriculture domain and now investing in companies at the growth stage. Where do you see some of the opportunities and the connections between consumer demands and where we're sourcing our crops and how they're being designed?
Well, it is true between people like companies like Monsanto, the Danforth, which has terrific research going on in the plant. There are a lot of interesting new ideas. The old system of, you come up with the ideas, the farmers get them, they hand it off on the other side of the farm gate, and each individual step is really kind of separate from the others. That's the piece that I think is changing rapidly, and I think it really is because the consumers are demanding new, different qualities in their products. And the only way that that's going to reach all the way up is you have to be able to draw that chain all the way down from the consumer through the processors, the food people, the processors, the farm gate, to the people doing the research to create those new products. And so I think people have got to be talking all up and down the chain. And since ag, at least for the row crop business, you get one shot a year to grow a crop, it's slow to move that chain and to change how those handoffs are going to happen and what's going to motivate the farmer to grow, the high oleic, if he doesn't know for sure that he has a market downstream. And so I think starting with the consumer, it's starting to pull back up and create some new distribution systems that in the past, were just too difficult to manage.
Great. Tom, I'll maybe slightly pivot with you then, as you work with students and faculty from the university that could be in numerous areas, as you described, that impact the ag value chain. Where are you seeing some of the emerging opportunities? And then I'll let each of our speakers talk about what areas they think are exciting that are emerging across whether it's food tech or ag tech.
Well, I would say that there is a ton of creativity in this space, but in my opinion, it remains a very challenging space for startup or early stage entrepreneurs to navigate because it's such a complex landscape. On one side, you've got maybe the most fragmented industry that ever existed, where if you're trying to bring a traditional ag product to market, you actually literally have to sell it to millions of individual farmers. And then you've got fairly tightly constrained distribution markets where there's really only a very limited number of players, and you've got groups like cooperatives that operate differently than a traditional distributor would, and you have to have a different business model to resonate there. And then you've got all of these demands that are happening in the marketplace, whether it's nutrition, whether it's farm to table, whether it is, so it's a very challenging landscape for somebody to develop a business model because the value chain from the crop in the field to the end user who's is having dinner is a very long and complex value chain. That being said, ultimately a lot of what we see people starting with is just addressing the growers, and it's the ultimate commodity market. You really only have two ways to try to make a grower more profitable. One is to make them more efficient and improve their yields because they can't really do anything about the price. On the other hand, maybe you can find a way for them to be able to differentiate their product and charge a premium price for that. But that's challenging given the distribution markets that are in place. So what we're seeing is people like Lucas that are developing ways for people to address the issue of crop loss. We're seeing new technologies to be used to provide better information to growers about how to manage their inputs. We're seeing people trying to find more efficient ways to perform specific tasks on the farm, and there's a lot of that going on. But business models really remains, I think, the most challenging issue for a lot of these startups.
So maybe as we go to the next section of what you like, and then I'll switch back to what you don't want to see more of. And I'll start with what you like seeing and what excites you right now. Rob, you have a new fund and a new opportunity to invest in new AgTech, farm tech companies. What excites you? What are you looking for? What do you want to see?
I think there's a number of things I think that excite us. We're kind of looking to go, not to use the Wayne Gretzky analogy, but where the puck's going to be in a lot of new categories that are starting to move away from kind of the on-farm technologies, which we've seen a lot of money going in, and there's a lot of great companies that are doing precision ag and imaging and the like. So, a couple of categories that we do like, one, believe it or not, is precision livestock. It's a category that's still fairly under the radar screen, but if you look at it, it is a massive global industry to help basically dairy and beef farmers do a number of things. One is improve their operation. There's a scarcity of labor, inefficiencies in labor that can be improved through the use of data, help them improve calving and estrus detection and illness detection. So it's a convergence of a lot of different issues that we're really excited about that can be solved with technology, which is a combination of Internet of Things sensors and big data science that can create a sustainable competitive advantage over the longer run. Another category is kind of later on in the supply chain, whether or not we're looking at a company right now that's helping improve grain exporting, which is a very, very mundane process that can be improved with technology. We've invested in grain marketing, in fact, along with Dave, in improving perishability in foods, which a recent deal we actually did with S2G. So kind of the non-traditional categories are some of the things we're excited about.
Great. I'll point out, Lena's here from AGCO GSI. It was cool when we welcomed them about a month ago that they were talking precision livestock, wearables for animals, IoT sensors within large-scale livestock operations, and how to improve the efficiency of those operations. So a new category for us to get to learn about here as well. Matt, S2G, what are you interested in? What excites you? What areas do you see as being ripe for investment at this juncture?
I think we like business model. Is this not okay?
Yeah.
You don't want to have to. It's the business model innovation. I think is exciting for us. I think there are a lot of things. I think because of the consumer looking to the soil or looking to the story on the farm, there are a lot of structures in place right now that just don't allow for that information to go all the way toward the consumer. And so, there are certain people that are on the protein side, in dairy. We've made a couple of investments around business model innovation, so it's not necessarily new technology, it's just different structures where, there is a complete chain of either ownership or at least information back to the farm, and there's potentially a value bump that you get, so you can get higher pricing because the consumer wants that story to be told. And is looking for that type of product. We like traceability is something that we hear a lot about. So technologies that basically help other businesses tell that story and track product all the way to the soil is very attractive. I will say, right now, if we're talking about Midwest row crop, this is an environment where farmer adoption is just it's very difficult to achieve for a lot of these new technologies that don't have either a track record of independently verifiable data or they have a high cost. And so if this is a market where the farmer has 40 to 50 at-bats in their life and is constantly sold snake oil, it's difficult to come in and explain why your new snake oil is better than what they've been hearing about and why they should spend money and take that risk. And so, you know, we like businesses that don't require them to do that right out of the gate. And so that's, you know, we're looking at a lot of things on the financial services side, on the insurance side that can provide some sort of backstop and help, you know, grease the wheels for farmer adoption and have a partner going with you to try some of this new ag tech that I think a lot of people would like to try, but it just isn't prudent for them to do so without that data or without that backstop. The last thing I would say is, you know, we're looking for technologies that provide a GMO trait without being GMO, and you know, there's a bit of a price bump that you pay for some of these traits. If you can undercut that price bump with a process that, you know, certain CPGs and brands don't want on their label, you know, that can be something that's pretty powerful. So we're looking at technologies where, you know, you're just breeding in silica, or there's some form of efficiency that can be gained outside of the GMO realm. That plays with a subset of the market, so that's something we think is attractive as well.
Thanks, Matt. We're going to have a grower panel, so we'll be hearing about some of that adoption, which I think is a great way to see what they're experiencing and what they're being sold and what they like and what they don't as the end consumer in some cases for some of these technologies. And also we welcomed recently in the last 6 months, Country Financial opening. We've got partnerships also with ADM and the Park, 2 big crop insurance companies. So I liked that you made a reference to how they can be partners and help with the delivery process as well. Dave, I'm going to come to the next category, which was prompted by a discussion of what you don't want to see. But first, I'm going to start with what you do like to see and what you see as the opportunities specifically for Lewis and Clark as you look at growth stage companies a little bit more than the seed stage.
Well, I'd say the very first thing that we like to see really good management teams who can explain what it is that they're really doing and convince us that they've actually talked to the customers that they think want that product. But more into the weeds, we're seeing a lot of really interesting things around automation, be it equipment on the farm or, you know, labor's scarcity is becoming a bigger and bigger problem in the Midwest, out in California, and people are starting to look at what can we do about automation, of whether it be grain wagons or tractors or variable rate applications. People are looking at what the problems are with really heavy equipment out on these fields in the Midwest, the compaction issues and so forth. And so there's some really interesting things happening in the automation area right now that is new, at least for us. We hadn't seen a lot of that until the last year or so. As I said before, we think there's a lot of value to be had downstream of the farmer in terms of who he sells to, how that material is, you know, whether it be traceability, how is it stored, how do you maintain the quality of the trait downstream, and so we're always interested in those areas. We've seen a lot on the microbial side and the general precision ag, digital decision ag, sometimes people call it. If you're in those areas, you really have got to be able to tell a compelling story about what differentiates you from all the other people who are in that area, because it's not really clear yet how that value is going to be delivered. So from the area that we're more skeptical about, it's really around some of those areas where there's a lot of competition and you really have to show what it is that differentiates you from all of those other folks who are fighting for the same piece of the customer.
We recently had an office open here for Indigo Agriculture, that's one of the bigger deals that was funded in the last year out of Boston with more biotechnology. Mm-hmm. Do you see opportunities there that Lewis and Clark might get involved with some similar types of companies making more radical crop sciences opportunities?
Yeah, Indigo's a very different business model than you know, at least the way we had looked at it. It really started as a microbial company, but now it's developed into something, you know, much different. On the strict microbial side, we actually are already in one microbial company, and you know, there's definitely opportunity to improve on yield and create value in those areas. It's you know, there, as well as with how Indigo is approaching this, the business models can be quite different from company to company, and so we have to look very carefully to try and understand, if it's a novel business model in terms of how they're interacting with the farmer or the customer, you really have to prove it out. And as we've said a couple of times, you don't get a lot of chances to test that when you're talking row crops. So you have to figure out how to rapidly de-risk some of those new models.
Great. So last night, Dave says, I don't want to hear any companies that start with a leading message of I'm doing machine learning, artificial intelligence, or data science as their first buzzwords. And yet these are things we read about all the time, and companies approach us and ask for those experts on campus all the time. And there's probably a reason why you're sick of hearing it, because you've heard it a lot.
We have.
Talk to us about each of you a little bit, and maybe you can start, Dave, since it was a conversation we had, about why that's become perhaps a frustration and what you want to see at a deeper level, perhaps around agronomy or something else that doesn't use those words necessarily as a starting place.
Well, at least the way we look at it, and maybe my sensitivity is I actually have a son in computer science graduate school here, and so last night I heard an hour's worth of AI and machine learning. But to us, we're not looking for companies who are developing those algorithms. We're looking for people who have figured out some customer need, and they just happen to be using these as tools. And so we don't think, when they lead off with that piece of it, it seems to suggest that maybe they don't really understand what it is that they're, what's the key thing that they're going to solve using those tools to deliver, to actually create that value that the customer is going to have a big pull for. And so we're a little wary about that. And most of the people that we hear who are talking about, we're using artificial intelligence to do this or that, in reality, they're really dealing with much smaller data sets than what the traditional, if you go out to Silicon Valley and talk about using AI on these relatively small data sets, they won't believe that that's really what you're doing. So we think that people need to really focus more on what it is that they're solving than to push forward with the tool up front.
Matt, you see a lot of deal flow. What's a non-starter for you?
I'd like to think nothing is a non-starter at this point, but I would echo, I think, what you're saying. You see a lot of businesses that there isn't necessarily a pull, and I think there's an assumption that, the industry is moving from data poor to data rich, and we just want to collect a lot of that data, and that's going to be valuable someday in some way. And I think there are a lot of businesses where they haven't really figured out the actionability there. And so what do you do with that data? Do I actually have the ability to make a decision based off of that data? Or is it something that, that's kind of nice to know on a very, this square foot of my 1,000-acre farm has this one nitrogen issue, but I'm not solving this problem with that, that level of granularity. And so I think we see a lot of technologies where it's either it's a platform for collecting a lot of data that will one day have value, but doesn't have a pull right now. I mean, I guess the main thing that is a struggle for us is having the capital to actually take that type of a business through to success. I think in the market right now, if you look at the information technologies and the amount of early stage risk capital that goes into those businesses relative to their contribution to GDP, it is 10 to 15x what you see in AgTech. And I think we saw some statistics where you see a lot more money coming into AgTech now. It's still a drop in the bucket relative to what you see in some of these other spaces. And so, we work with syndicates in every single deal. We've done a deal with, 2 deals with Lewis and Clark. We've done 1 deal recently with Sarah. There's not enough money in the space for everybody to wait for a pull strategy to develop. And so it's hard for us to make those type of investments where you don't see a very near-term need and dollars from the customer on the AgTech side. So those are things that we steer clear of because we can't be the sole provider of capital through that J-curve.
Thanks. Tom, you work on a university campus and work with a lot of faculty, across the state, I should say, as well. But working with academics on a university campus, what are some of the challenges you think of looking for investment but coming from a research framework?
I'll come back to the business model comment that I was making before. Oh, sorry. I'll come talk into the microphone, please, Tom. I'll come back to the business model comment. I think it is unusual for faculty researchers aren't particularly interested in business models. They're interested in new ideas. And as we've heard from several other people on this panel, it's really, can you develop a rationable and fundable plan for actually getting this technology into the hands of customers and getting paid for it? And I have heard many times also this is really a data play, and we're going to try and make this technology available really cheaply, and hopefully the data will be worth something to somebody. Those aren't really very credible business plans. But I'll turn that over and say that I am kind of excited that there are so many big things happening in the ag technology and farm technology and even the downstream market, that it's possible to do things now that it was not possible to do before. Early in my career, I was an investor in Peapod, the computer grocery shopping business. And I would not have ever thought of that as an agricultural technology play. But then you think about farm to table, and you think about Amazon Fresh, and you think about the amount of money that groups like SoftBank are putting into new opportunities, and maybe there is now a way to create something in this distribution channel, downstream distribution channel, that's really disruptive. As a venture capitalist, you said look for disruptive technologies. This is a hard industry to find things that are disruptive in. But I think that if we look out the next several years, I think we're going to see a lot of really disruptive technologies, not just nutrition and efficiency and on-farm technologies, but really disruptive business models that are happening downstream to bring some of these new products and new technologies to the end consumers.
Rob, last but not least, what do you want to see a little less of coming across your office as an entrepreneur in residence or as an investor? What are some of the things that you would warn people to not lead with?
Well, I think as an entrepreneur, you need to do a little bit of research into the fund that you're pitching and see where they already have bets. So, like for example, we're not going to do another precision ag play, or probably not another precision livestock play, or another grain marketing play. So just do your homework in terms of the venture firm that you're pitching or looking into, looking at their portfolio in general and how you could be a complement to what they're doing. So I wouldn't say that I'm down on any particular spaces other than ones that we've already invested in.
So if you've invested, that's your bet on that area, and you're going to look for another sector within perhaps farm tech or ag tech that you don't have in your portfolio yet.
Exactly, more or less. That's a general rule of thumb, yeah.
Okay, great. So we talked a little bit about in this sector that there have been a lot of large industry corporate partnerships. There's been corporate strategic investors, and there have been many notable exits, which can be promising as an opportunity at the the opportunity as an investor, I guess, that you'll see your money back. Any exits of note that excited you in the last year or made you think differently about where the market might go and the potential for startups as they might seek acquirers in the future?
I mean, I can take that. I think that's really the big pink elephant in the room, Laura, that you just nailed, is who's going to buy all of these great companies that we're building right now. I've tried, again, we're a generalist and we do some ag tech, and tried to get other generalists to invest in ag tech, and the biggest problem that they all get hung up on is, well, show me some notable exits that aren't kind of one-offs that I can point to as good comparables. Sure, we know all of the Blue Rivers and the Climate Corps of the world, but us as investors, we're really making a bet that non-traditional buyers are going to come in and start to buy some of these companies. I mean, that's really the bet in my opinion, that we're making. Because John Deere, not very acquisitive in general, not very innovative, sorry, John Deere folks. But a lot of the major ag companies, they're just not, they're not a Microsoft or a Google. They don't have a history of acquiring companies at a rapid rate, which is what traditional venture capitalists look to as they consider an investment. So I think that is really, that needs to unveil itself over the next couple of years to figure out who's going to be buying these companies. And I think we're going to be surprised. I think we're going to start to see some very interesting acquisitions. They're going to say, they bought them, why? And let's just watch and see.
Anybody else see anything that interests them?
Well, we certainly, Granular, for example, is a good example of showing, okay, you know, some of these, there's various companies out there who compete at least partially with what Granular does, but, you know, they're starting to move into mainstream, and so that should give some, make a little warm and fuzzy for some of the other people that maybe that's an area where people are starting to pull together different pieces into a larger platform that they can provide. So that would be one example. But I also think about what Granular, there's a small imaging company out of North Carolina, Farm Shots, just recently got acquired, a few others, and in many of these cases, they already had, the company that ended up acquiring them, Farm Shots, for example, Syngenta, already had some investment in them, some corporate investment, and so it was almost as if you're doing a trial investment to see what, is this a group that's going to fit well, and then they bring them in. And so there are a number of cases recently where there have been steps along the way to having an exit where the exit's, you know, acquisition by a larger company, be it a big, you know, AGCO or Syngenta or others. And so that's out there happening. But I would certainly agree that we don't, there aren't that many really big exits to point to and say, this is what we're going to compare to. And that's one of the big problems when we're doing our due diligence on a company, is to try and figure out, well, you know, when they're all grown up and really successful, you know, who's going to want them, and what's that number going to look like? Because that will tell us how much you can invest early on to help build that value. And so that's, the more exits we get, the easier that will become for everyone.
Great. I'm hoping we have some inquisitive people in the room that can ask a couple of questions as we work on this conclusion of the panel. There's a microphone straight in front of me if anybody's got a question for any of our investors, either specifically or generally. I see one in the back coming forward.
John Scholl from a farm in McLean County. It seems like we talked maybe about a couple different models of agriculture. One's a highly engineered, large-scale agriculture. Another is more of the natural, small-scale agriculture. My question relates to headwinds. How do you see a lot of what you're interested in terms of developing technology, which is engineered, maybe a little larger scale, meeting that resistance from a lot of consumers that are really pushing very hard for that natural, organic, you know, locally produced food, as well as policy-wise. I know the power of the image of that small-scale natural farmer. What kind of headwind or resistance do you see from a policy perspective that might prevent you from accomplishing some of the things you're trying to accomplish?
I guess I'll try to take a stab at that. I'm not sure that I'm that's a really tough question. So yes, I think that the biggest challenge is that if you're trying to provide a channel, a very complex channel through which agricultural products that consumers are willing to pay a premium for can actually get to them in a way that they can be delivered at a price that the consumer is willing to pay, even though it's higher than, you know, a commodity price, and still reward the grower for the extra effort and investment that's required to produce that natural, sustainable, or whatever. I mean, I think that's the challenge. That distribution channel is so complex and expensive. And that's one of the reasons why I'm excited about things like whether, something like an Amazon Fresh is a way to make it easier for those local growers who are doing things that are innovative and sustainable and healthy to actually get products to market without just having to rely on the local farmer's market or the local food co-op to do that.
Yeah, maybe to add on to that, and you're going to need the systems in place to scale. Like, for example, if Hellmann's Mayonnaise wants to source only sustainable soybeans through ADM crushing facilities, how does that happen? What needs to happen there? So you need the systems in place to actually track on a field-by-field basis what's going in, what are the inputs there? And then on the other end, you need Unilever, Hellmann's, to be able to identify which fields they want to source and route that through it. So it's a complex system in place that obviously a number of companies are working on to make that happen. But I think that's the opportunity and the challenge.
Yeah.
I think, you could see a state of the world that is significantly more fragmented than we see today. I still think, in terms of that small batch, local brand, the craft brewed model, I think that's where a lot of CPGs want to go. And I think, if you look in the examples with craft brewed in the beer space, I think you have a lot of those brands that have a mission and an ethos that are now, scaled quite nicely. I think the reality is, I think we believe that organic is sort of 1.0, and that CPGs and consumers are looking for specific traits. And you could see a state of the world where you have this sufficient financial and risk sharing systems in place that allow those types of farming to scale, not necessarily always to the scale that you see on the conventional side, but to a larger scale. And so can you put, I think the Unilevers of the world and your General Mills and your Kellogg's are looking upstream to actually create these bespoke solutions. And if you want to do something on a box of Cheerios, you're talking millions of acres. And so I think they may have to have more fragmented approaches to the brands that they push and the label claims that they push. But we'd like to believe that you do see some scaling of a variety of different claims over time that is somewhere in the middle between what we have now on the commodity side and what you see on the small batch farmer side. And I think from a policy standpoint, one of the things that we really push for, and I've said it before, is on the insurance side, can you get protections and backstops in place so that you have financial services that allow for the long-term types of thinking that are necessary to make the soil amendments that you need, to use a rotational growing platform, and have the confidence that there is going to be offtake that is profitable for you in year 3, 4, and 5, when you actually start to produce things that meet the needs of the CPG that's looking for these traits.
Do we have any last burning question here? Indu? Oh, Jen May?
Thank you, Laura. Sorry. I'm Indu Rupasara, CEO and founder of Fruit Vaccine Incorporated. My question is, how do you see plants as a factory for something like vaccines and their fruits as a delivery mechanism in the future?
It's maybe specific to your company, but if we could go a little bit broader, if somebody wants to tackle, is there a medical opportunity to use food as a delivery platform for medicine?
Well, there've been a number of attempts at that in the past. Going back, I was actually involved in one of them maybe about 20 years ago, using bananas as a way to deliver certain either nutrients or potential vaccines, and they had difficulty with really creating a chain that would allow them to reliably deliver it all the way downstream, and not having too many steps in the chain where there were handoffs where it made it that much more difficult and more expensive to do it. I don't see any reason why you can't do it, but you really need to be people have to be convinced that there's no cross-contamination with other food streams. Beyond that, I've always been a big fan myself.
I'd like to thank everybody that was here as a panelist. I believe you'll be here for a little while if people want to interact and ask their questions directly as well. It's great to see a growing community of Midwest investors and syndicate partners working together to make these companies successful. So thank you for joining us today at AgTech Summit. We will have a 10-minute break, and at 10:30, we'll be back in the room to hear from our growers.